jump into it. I want to talk about futures today. Maybe you guys have touched on this a little bit already. Coinbase got approval from the NFA CFTC to offer the derivatives that they currently offer outside the U.S. in the form of, they have a couple different futures, but primarily just in the form of Bitcoin futures to U.S. customers. Want to get your thoughts on that. Look at the space as well, because obviously you have a lot of futures trading outside the U.S. as well as some of the products that are offered through the CME. But before we do that, just a quick check to make sure that nothing has really changed in crypto over the last week. Volatility, they're now saying, is lower than crude oil. Can you believe it?
Wow.
It's unbelievable.
Yeah, that is kind of crazy.
It doesn't surprise me now. I've solved the whole real estate Bitcoin, volatility
complacency?
model. It's not complacency. It's just there's no sellers.
Yeah, well, I mean, so volatility is low.
It's just no sellers. Yeah. We always thought when there was no sellers, the market would, the thinness of the market would pump volatility, but it's exactly the opposite. But let's get back to this futures thing, because I think it is interesting. It's interesting because, first of all, this is really going to help pave the way for crypto futures for everybody, including us on the small exchange and the new futures exchange we're launching in first quarter of next year. So this means that they basically, opened it up for everybody else. That's number one. Number two, I don't know of anybody that's connected to the Coinbase futures exchange. So although it's interesting that they got approval, which means that now everybody can get approval, I have no idea who's connected to them, because we're certainly not,
right,
and where they're clearing.
Yeah.
I'm not sure. So I don't know any of those things. So for purposes, unless we decide we want to write to them, which I would highly doubt right now, because they have no volume, they don't even, and their own customers aren't futures customers. So I'm not sure. I really don't get this move for them.
Well, let's dig into that. If we jump into the next slide, just a little bit more background if anyone's just joining. Sometimes there's confusion or it's conflated. Approved and launched are different things, obviously.
Yeah, sure.
They were approved, which, to your point, huge step. I think huge step for the financial industry, for retail traders, and for what everybody's building. They already offer this product. And so just to kind of put some context around where we're at, 2.6 billion in volume over the past month.
I don't know what that means.
So that's just the notional trading volume.
I understand that.
Tiny amount.
But
right?
I understand.
No, he says he doesn't understand what it means. He understands the English language. He doesn't understand what it means to him, is what it means.
We need context.
Well, here, it's total bullshit when they say $2.6 million of volume. Like $2.6 billion of volume. I mean, Tasty does $10 billion in volume in one day. Easily. Probably $20 billion a day in notional volume. Like, I don't know what that means, I
guess the way that I would just think about this is that it's...
What's a contract size for them?
And I'll jump into that in just a second.
Okay.
We've got some of those details. But maybe just to look at, where's the majority of crypto trading really occurring? It's in derivatives markets that are outside the United States.
It's in the spot market, though.
Well, it is, but when you look at just the notional volumes, like where is just that trading activity? It'd be 554 billion in the past month outside of the U.S. when you look at the biggest players.
Right, and that's all in the spot marketplace.
These are actually through perpetual futures contracts.
Whatever, call it whatever you want. They're perpetual futures. That's a spot marketplace.
Yes, but
it's not
cash settled.
Yeah, cash settled spot marketplace. It's not a listed marketplace. It's not a listed exchange.
Correct, not in the sense that you have the CME as a listed exchange, but in the sense that you have the biggest crypto exchange globally in the form of Binance.
Yeah, but
not
these are all spot private. These are all over the counter markets, spot markets. By these exchange, I don't consider Binance an exchange.
Gotcha.
I know there is.
It is the biggest.
I know they consider themselves an exchange, but I don't consider Binance an exchange. I consider Binance a company.
Okay.
And your counterparty is Binance.
Absolutely. Yeah. But they run an exchange.
I understand, but it's not. It's guaranteed by Binance.
Absolutely. Huge risk. Yeah. This is not the New York Stock Exchange. No. That's for sure. But there's a massive amount of volume that's occurring on these exchanges or through these companies, and that's where the majority of, let's call it, speculation around the price of crypto is occurring. When you look at, where is that coming from? When you compare that then to the CME, so CME is certainly much bigger than what we've seen outside of the U.S. And crypto futures through Coinbase have just been announced and launched recently, just to international customers. Yeah. But with the CME product, you're seeing open interest pick up and to the right. You're seeing volumes pick up. They're down from the peak, but this is a product that's growing. It's evolving, and so you're seeing 55 billion in volume in the past month there. And if we just jump to the next slide.
Just to put some context around it, they traded so far today 6,000 contracts at the CME.
Yeah, that doesn't trade.
No, that's not bad.
It's a big product.
/MBT.
Oh, I thought you were talking about the big one, the 5 contract.
The 5 Bitcoin, which is real. Okay, yeah. They've traded 5,000 contracts on the micro. They've traded 3,000 contracts. To put a little bit of context around that, if you looked at like ES, for example, so far this morning they've traded 350,000 contracts. So it hits a minuscule product based on the amount of volume. That's all.
Do you think we'll see that change then? Because I guess what this just illustrates here is futures trading is huge outside the U.S., not as big here, more institutional, I suppose, when you look at the CME contracts.
No. Futures trading, these are...
So I'm just looking at the volume, the notional volume, just to compare.
Yeah, but these are just called futures. They're not really, these are privatized futures.
Correct, yeah. So...
These are over-the-counter futures.
On the left-hand side, and then on the right-hand side, we've got the CME product that you just referenced.
Yeah.
And just to compare, there's not a lot of volume. Relative to, obviously, the S&P. But even when you look at the CME, not a lot of volume relative to where we are in terms of the participation outside the U.S.
I agree. Yeah.
So with Coinbase's approval, do you think that you'll now start to see more U.S. customers participate and trade crypto via futures, or is it not really that big of a deal at this point?
It's not big. It's not a big deal at this point. I hope it's well. First of all, like I said, nobody's connected to Coinbase, their exchange. I don't even know the name of their exchange.
I think it's called Coinbase Derivatives Exchange.
Yeah. So no U.S. broker is going to connect. I don't think. That a U.S. broker is going to connect to a Coinbase Derivatives Exchange, because none of us are going to want our customers going to Coinbase. Okay, it's not going to happen. So that's why I said I don't really understand their model. And they're not are they even licensed to take those customers?
Well, I think that's what we just got, right? And correct me if I'm wrong.
No, they're licensed to offer the futures product, but I don't know if they even have a U.S. brokerage that can take futures accounts.
That can clear it, you mean?
I don't even know. They don't clear for sure. I don't know who they use as their FCM, but I'm not even sure that they're a licensed broker.
Yeah, I don't know. I guess we could look that up on...
I think it's a weird move for Coinbase. I think they're just trying to do it to get in the exchange business because they think that the potential's there, and also because from a regulatory side, it legitimizes them. And I'm also happy that they did it because it will make things easier for us at the small exchange. I just don't see anybody using their product. Maybe people will use the product around the world. They'll come back and use the product here, which again would be a good thing for us. But I think it's a smart move for Coinbase because they bring their product into the mainstream. I just don't think you're going to see people trade it.
Yeah. What do you think has prevented people from trading some of these micro Bitcoin futures or micro Ethereum futures, which also have options on them, are listed through the CME? Why aren't people trading them?
Because the crypto marketplace, the digital asset marketplace, is basically a spot marketplace. You could say the same thing about spot FX. Why don't people trade spot FX? Why don't people trade options on euro and British pound and Canadian dollar? Why don't they trade more contracts? Why is everything done in the spot marketplace? Why is $1 trillion trade in the spot marketplace and $100 billion trade in the listed marketplace? Because those marketplaces were essentially nobody wants to. My rationale for it is the world doesn't want to convert to U.S. dollars.
Okay.
So, and they don't want to move money to U.S. brokerages. And it's very restrictive in that sense. And the international exchanges are not strong enough to support it yet, so that people stay in the spot marketplace.
Okay.
So the whole reason, most of the people that trade crypto don't trade futures or options or stocks. They trade crypto. And the people that do trade futures, options, stocks couldn't care less about crypto because it's not liquid enough. And there's no option marketplace. And they don't trade the spot market. So they have two different marketplaces going. That's why Coinbase makes all their money in the OTC and spot market. And that's why it's such a niche business what they have.
Gotcha. And then do you think it's just so big? I mean, when you look at how prevalent futures trading is relative to spot, outside the U.S., 75% of crypto trading via these perpetual futures, these OTC derivatives, which I guess are just CFDs in a way.
Yeah, they are.
Is it because there isn't as robust of I mean, because when I look at a Binance outside the U.S., you have the access and more to all of the same spot products. But people there, through that exchange or through that company, prefer to trade futures, it seems, as the way to get exposure. But you don't see that out of the U.S. Businesses for whatever reason.
Well, because you can't in the U.S. So
Okay.
first
So
of all,
it's
you're
more
not,
of like, just is it higher capital requirements?
No,
for
you're not allowed
FCMs,
to.
Or?
there is only a listed marketplace in the U.S.
But why? I guess that's what I'm just trying to understand is if there's anything that's preventing the larger adoption of these CME, like you have these micro futures,
Yeah.
I would think that's a great way to efficiently get exposure to the Bitcoin price if you want to. But to your point,
You would think that people that trade this stuff don't trade those products.
Yeah.
They're just that's not the world they grew up in. They grew up in a world of trading the spot marketplace. They just don't trade the futures. They don't understand leverage. They don't trade futures. They don't trade options. They just trade spot market for cash.
Okay.
It's a very strange. That's the weird thing about digital assets. And globally, they don't want to convert to U.S. dollars, and they're comfortable with the current, you staying in their own, in their own currency. So they just, they're happy with what they got. They'll take the risk of Binance being the counterparty. It's going to all change over time, but it's a slow process.
Let's talk about that. How do you see it evolving? Because if you do have other participants, and I would argue the CME is doing this as well, right? There's a bit of innovation that's coming to the marketplace where you're seeing now futures launched by the CME that not much volume, I think it was just last month, but launched where you can trade the Bitcoin Ethereum spread.
Yeah.
Just through that product.
So there's going to be a huge move in the U.S. is not. The U.S. exchanges are not stupid. They're crazy smart, and they're very competitive, and they also see what's going on, just like you do, around the world. And they look at that notional
They're a
amount.
little slow to act, though, don't you think?
Not really. They're pretty. Now that they're all publicly traded, they're pretty aggressive, and they're looking at seeing what's going on around the world in Bitcoin and everything else, notional wise. And my guess is that within 6 months, you'll see a competitive perpetual futures product in the U.S. for digital assets.
Okay.
And I'm sure the Merck and the SIBO, and that's why the SIBO just launched an exchange. That's why Citadel just launched an exchange. I mean, they're coming after. I wouldn't want to bet my future on Binance. Let's put it that way, or any of those places overseas. I think that the SIBO, the CME, Citadel, they'll all have perpetual futures. They'll all compete with these guys. They'll probably put most of these international exchanges out of business in a very short period of time. And the only way they'll stay around, for the same reason that FX stays around, is because they'll stay in a certain currency and people don't want to convert to US dollars.
Okay. Interesting. Well, I'm excited to see how it evolves.
It's going to be good for you. It's going to be good for the business because it's going to change the flow from being all OTC to being more of a mixture of listed business. But the real question is, how does the business change over time? Like the whole crypto futures business, and the answer is it's from firms like us at Tasty and other firms like, Tasty, Interactive Brokers, TradeStation, Robinhood, firms that offer crypto and futures, because what we're doing is we're integrating all the products so that, like Tony, if he's a customer, he doesn't have to have 6 different brokerage accounts. He just goes to one place, trades whatever he wants.
Absolutely.
That's the future.
Well, last slide we've got here, just a quick comparison between the CME, the big and micro contract, and then the Coinbase a standard big contract and their nano BTC, which I think the significant difference here is just that the smaller Bitcoin contract is 1/100th versus the 1/10th when you look at the micro. So a couple more, I guess, bits of information there on that. But I'm excited to see how this all evolves. I'm also really excited to learn more about kind of what you've hinted at or alluded to regarding the small exchange and what we might be doing there. Maybe it's related in some ways.
It's not related necessarily into like it's not going to be a contract competition like this stuff. We're actually building a brand new exchange that will change the way people interact with an exchange. So we're building it from kind of the foundation up. Like this difference here, the CME Micro versus the Bitcoin Nano. The Coinbase Nano. I don't know.
Oh, there's not much of a difference, right?
I like
unless you're going to just do 1/100th of a Bitcoin.
I don't understand why the CME did 5 and not 1.
It's silly.
It's hard to understand that, right?
$150,000 contract's too big.
Yeah.
But a 1 is perfect.
Yeah.
In my mind.
I think so. Do you think it had anything to do with just wherever the price of Bitcoin was when it launched? Was the price much, much higher?
That would make this.
Oh,
that would make the
actually,
argument.
It was around between 15 and 20 when they launched.
Yeah.
So it didn't make any sense to me why they did. I think they did because the CME is always focused on their institutional customers. So I think that's why they did it. But they messed up. They admit they messed up. They know they should have gone with 1. If they did 1, it would have been a much better business.
Yeah. Cool. Well, that's it for me, guys.
Awesome.
Thank you.
Good job out of you. We're going to take a quick 90-second break and come back. We got more Tasty Live coming up next with a market measure. Thank you, my friend.